Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's my contact information if you are interested. Email me, jperson@nationalfutures.com, or go visit my website, which is nationalfutures.com. You can fish around in there. Our office number is 561-655-1881. If a quiet young man answers a phone, ask him if he's in a trade. It would probably be my son who might answer the phone. And he does trade. And in fact, if you plan on coming to New York City to the Online Traders Expo, certainly stop by our booth, and you'll probably meet my son, and you can see us out there. We'd love to meet you and answer any of your questions. And with that said, if there are any questions today that folks have, I'd love to take advantage to see if we can clear up some questions that you may have had.
All right, John, first of all, I want to say thank you. I forgot about that November call that you were just spot on that one. I remember you making that call. I mean, that was just amazing. So, guys, if you're interested in this, go to nationalfutures.com. John's the real deal. He really understands the markets, but I think he just makes it very straightforward. So, that's up to you. Please check it out. You could always go read one of his books, and then you'll probably be back on checking out his website and everything else. John, thanks again. I have some questions. Doug says, I've heard currency pairs can trend for long periods up to 24 months. So how does that fly with the annual patterns that you're seeing? Does that create those muted moves that you were talking about? Are there any logical explanations why there would be yearly calendar-based patterns?
Well, one aspect is markets do trend. The longer-term trend in the euro currency since its inception is up. But depending on where you got in, if you bought the euro currency last July, you're certainly taking it in the keister because the euro currency has done nothing but head southbound. So, currencies can trend, but no market goes straight up. There are corrections along the way, and that's where we see there's the cause and the effect. What's the cause? The cause could be an end of fiscal year balance for governments, and so the effect would be the market would do a counter trend trade, and so that would be evident in that seasonality, and those are the reasons, and we discussed that at the beginning of the presentation. But thank you for your question. Next.
Yes, John wants to know, and this is, I don't know if it's too simple or if it's actually too complex. How do you determine your stop position after you entered the market, John? Is it the pivot points that you look at?
Okay. No, that's really a good question. I actually have a couple proprietary methods, one of which I do explain in my DVD course. It's called the last conditional change method. And I put certain stops above specific bars highs. There's conditions. And remember I talked about that snapback feature? If the market departs or deviates too far from the means. In other words, if we got a market move, like I showed in the Japanese yen, I would have to say, am I going to get in the trade, or am I going to place a limit offer on a retest of the moving average, so to speak? And that's one of the techniques that I use. Then when the market gets up there, that's when I'm starting to, price out options, because we all know when the market rallies, puts are cheaper. When the market breaks, puts are dear or expensive. And so from a stop and an entry, I actually go through a complete section on entry and specific stops, namely my proprietary, what I call the LCC, or last conditional change method. Thank you for that question. It was very good.
John, the next one is from Robert, and I'm not so sure that you can answer this. He's really looking at a long-term approach, and he wants to know, do you see parity for the U.S. dollar ever again against the euro, and would you trade that way? Do you trade it long-term, or do you look at things a lot more?
Oh, you know what? If I was on the floor, I would answer that question with a lot of colorful language. There isn't a single economist in the world that should be kept they should stay with their jobs. They should all be garbage men. I don't think anyone in our changing world, I have more respect for, absolutely, I have more respect for weathermen, and I tell you what, anytime they predict a storm is coming, the major, massive blizzard, nothing ever happens. It's always the storms they don't call, that's the one that happens. And economists can't see the light in the tunnel 6 months from now. To trade anything longer term, I've never been a long-term trader, and I believe in this, and I was told this a long time ago. When a company or someone does very well, competition will come in and maybe knock the big guy off the block. And so things always change. Long-term investing is just not anything that's been embedded in my brain. And so as a trader, and that's what it is, I'm looking for turnover. And so I can't predict where the dollar's going to be. I don't know if America's going to be a socialist country 10 years from now. I don't know. There's a lot of different policies that we have. I don't know where we're selling our debt to. How much money are we going to print? There's a lot of things that is uncertainty. I can only take one trade at a time. And if the market, someone asked me, John, you've been harping about the yen for 2 weeks now. I did this nightly video, and we were just harping on it for the last 2 weeks. And I got an email, and someone said, well, why aren't you talking about the euro? Because I'm not in the euro. I'm doing what's working, and it's working right now. So the moral of the story, sir, is this. If the trade's working, I go with it. If it responds well to the technical analysis, if the seasonality says and dictates the market has selling pressure this time of year, if my daily sell signals, if the market's showing signs of bearishness, lower closing lows, meaning the market's closing below past or prior lows, if the market's closing below the open, if we have a sequence of lower highs and lower lows, that's falling in place to a bearish outlook, and I'm going to go with that trend until I'm proven wrong. I go with the trade until it proves me wrong, so to speak. And I don't know what's going to happen to the dollar 6 months from now or 10 years from now, but I wish I had that kind of insight. Thank you. And if you ever find out, email me personally. Let me know.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.